Hey guys, welcome back to the channel. Hey, I'm reading some of the comments and I'm seeing some people ask me questions about what's a market structure shift and what's the difference between a market structure shift and a short-term high or short-term low being taken out. And so I want to go over that in this video and show you where if you don't choose the right market structure shift, you could be losing some of your trades. And so we're going to go through this real quick, and we're going to do it a couple different ways. So just bear with me. I don't know how long this video is going to be, but I'm going to try not to be that long. In general, this is what we're trying to do, the 2022 mentorship model. That's what we're doing with reversals, okay? We want to see a short-term high being taken out. We want to see displacement that takes out a market structure shift. Now, why is this a market structure shift? Well, this is the swing low that was the catalyst that took out that swing high, forming a new high. And then when price comes back through and trades past that swing low, that's your market structure shift. We look back for displacement, we get in on the fair value gap, we take our trade lower. But that's the 2022 model, okay? That's a reversal pattern, okay? But here's how you could be getting faked out on your reversal patterns. Let's look on the line chart at this leg right here, going up right here, okay? And let's keep this model in mind, so let's keep this in our mind here. The first one I want to show you is we see a price comes up, makes a short-term high here, comes down, trades back through it, right? That trades through that. Well, why not this one? Well, this didn't trade through anything. Okay, so this one right here. So that one right there would be where a lot of people would put a market structure shift right there. Okay, so where's another one? Well, so this from down here comes up, comes down. There's your swing low, takes out this swing high there. When it trades back through it, now when we're looking up, that could be a market structure shift. Right? That could be right here. Okay? Where's another one we could look at? Okay, what about this? Comes up, comes down. That's right here. There's your swing low that took out this swing high and made a new swing high. So when it trades through it, come back up, we're looking for a fair value gap and we're taking it, trading it down. Okay? What about this one? This is the swing low. You can use this one or this one that took out a swing high here. And I think it's even here on the line chart, but on the candlestick it's actually higher. So this is the swing low that took out a swing high. When it trades back down, it comes back up. You could be looking for a fair value gap and trading that, taking that trade. Okay, so let's throw the candlesticks back on there. And now let's look and see, let's play these out one by one and see how they could have been traded. Okay? So we're just going to leave this back on there and let's do the replay mode. Let's go back through here. We'll leave the line on there and we'll move this over. It's in the middle of the screen. And let's play this out. And it's coming up. Well, let's see here. That's your market structure shift. Came back through. What can we do? There's no fair value gap here, but there is. This is an order block. Okay. So let's say it comes back in here. We could take that as an order block when it trades into it. Okay. So if someone traded order blocks, they could put their thing at the stop at the bottom of the order block right here. And gone one tick above that and gone for 2 to 1. Okay, let's see how that plays out. Oh, saw that line and I was like, oh, we got it. Nope, didn't get it. And didn't hit it. Didn't get it right there. So that was one that we didn't get. Now look, here's I'm going to take this one off the chart here and take these off. So we'll leave the line there. But this is a low. When you come down here, right there, it's a swing low that took out the swing high over here. So what about that? What happens? Well, let's see if, well, that's a market structure shift if it comes back through. I've seen people take these in their videos. I've seen people take these and they've been successful, but I'm going to show you how they sometimes don't work that way. Okay, well now we need to see it break through it, and it breaks through it. Does it leave a fair value gap? It does. Okay, so there's a fair value gap. If you're sitting here and you're like, hey, this broke through, it completely broke through here. If it comes back up, be honest with yourself. Would you be taking this as a trade? A lot of people would say yes. So a lot of people are saying, hey, that's a down candle. If it breaks through that, I'm taking that as a market structure shift. They're doing that, right? So let's play this out. Price is coming down. It's doing good. Aha! Now we can get in. Get in our candle. Get in right there at the bottom of the fair value gap. Where's our stop loss go? Goes above the first candle, one tick above, right there. Okay, sweet. We're in. We just need to cross this swing low. That's 2 to 1 right there. And we lose again. That's 2 losses in a row. Okay, well, hold on a second. That's a down candle that took out a swing high here. So let's throw that on there. If that breaks through here and trades up and leaves us a fair value gap or something, I'm taking that trade, right? That's what you could be seeing. Now you can go through the bottom here. Sure, let's move it down to the bottom. All right, trades through it. Leaves a fair value gap right there. If this was live price action, candle by candle, you're seeing this. You're seeing market structure break, market structure break, market structure break. You see this down candle being low. It came down, it broke through it, and now it leaves a fair value gap. Be honest with yourself. Are you taking this trade? Well, a lot of people are taking this trade when it goes back through it. Well, one candle down. Comes back into it. They took that trade. They had a limit order right there, and it got put in right there. 2 to 1. Goes above. So you have to draw down. You're even. Let's see how it goes. Oh wow. If that didn't take you out, you're sweating it now, and you just got out right there. Okay. Crap, there's 3 there, right? All right, well, let's see how it plays out. Here's what I see, okay? Here's how these 3, just using the down candle, is not proper market structure. The way to do market structure is actually to say, hey, well, this swing low here is the catalyst that started this, that took out the swing high, okay? This is the swing low. That's the start of the leg that took out this swing high, okay? So if this gets breached and trades back up, I'm taking that trade. Now, if it comes down to this down candle, it already broke this. If it comes back up, I'm not trading that. That's what we were doing over here. That's where we got these 3 losses here. Not every down candle is an order block. Not every down candle pullback is a break of market structure. Okay? So when it trades through that, close. Now it traded through it. Now my eyes are going back. What do I see? I see a fair value gap there. I'm putting a limit order right there. Why? Because it broke market structure. It didn't just break a swing low here. It didn't just break a swing low and take a trade. It was an actual, the swing low, that leg that took out the swing high here. So now, if it comes back up, there you go. I'm taking that trade. Where would your stop be? 1 tick above the high here on the first candle. Okay? How does it play out? There you go. Okay? See how proper market structure could get you into more winning trades? If you're losing a lot and it's going right against you, chances are you're not picking the right market structure shift if you're trading reversals or the 2022 pattern. Okay? So let's look at these and see how we could have avoided them. Well, we said we thought this was the swing low that took out this swing high, which it is. But it's not the catalyst that really started this leg up, is it? Made this major leg up. It would have been down here. You could go with this one too. One of these 2 legs right here. Did they ever get taken out? No. So we're still bullish. This is just a retracement into a volume imbalance, into a fair value gap, and up. That's it. That's all this was. Okay, so this one, we avoided by proper market structure. What about this one right here? This is a down candle that took out a swing high over here. Took out the swing high right here. But that's not a market structure shift because this is the swing low, the proper swing low. And was it ever traded back through? Not yet. I mean, it does later on, but not yet. So we wouldn't have taken this. This is just a retracement into where? Into this volume imbalance. Okay. So these two we weren't in. This one, this fair value gap right here. Is this this little pullback, the leg that started this? No. This is the swing low that started this leg that took out this swing high here. And this swing high. So for this one right here. It wouldn't be this one. So we would get in here? No. This is just a retracement. This is creating a swing low to be used for a market structure shift. This is just a retracement. And then this is the swing low that took out formed the leg that took out this swing high. And when it was traded through, that was a market structure shift, and that's why this trade right here worked out. That's why that one worked out. So we could have avoided these 3 trade setups, these 3 losses right here, by using the proper market structure shift. This one, we should have used this down here. Never traded through, never traded that trade. This one was this one right here. Did it ever trade through it? No. We wouldn't have taken the trade. This one, was it traded through? Not where you took the trade. Not here it didn't, so you wouldn't have taken the trade. Here you've already had a market structure shift, so this is a short-term low being cleared. Market structure shift was up here because this is the swing low that again took out that swing high. So I hope that clears it up. I know it's been a long video, but I wanted to at least show you how I see market structure shifts, how to avoid taking the wrong swing low as a market structure shift.